Yeah, hi everyone. This is Nithin from Zerodha, and welcome you all to the FinTech Month, which is organized by Niti Aayog and PhonePe. Um, I am actually, this is the first time I'm actually moderating a panel, so a little nervous about it. But I'm super excited to have my colleagues from the industry. I was just looking up, all of our active user count, and I think we represent half of the Indian retail broking industry. So there is Vijay from ICICI Sec, Lalit from Groww, and Kavitha from Upstox. The idea is over the next few minutes, we'll just discuss about the opportunities for people starting up, or looking at investment tech, as they call it, the industry, as in what is the potential of the capital market industry. What are some of those like pain points for the industry and all of that, right? So I'll kind of dive in. Maybe I'll start with Vijay, and if Kavitha and Lalit, at any point you want to jump in, you can just jump in. So all right. So Vijay, you've been you've been doing this for a while now at ICICI Sec, and what do you think? As in, I mean, you also were at the bank before. So what do you think? Like like when you, with whatever viewpoint you have had as a banker first, and then running ICICI Sec, what do you think has been the biggest reason for the growth over the last 2 years of the capital markets? Because it's been phenomenal for all of us, right? So what do you think? What do you give this credit to?
Thanks, Nitin. While you just mentioned that this is your first time as a moderator and you're nervous, let me tell you, this is the first time I'm getting moderated by you. I'm more nervous than you are. Let me give you my color. And we've been really scratching our head to figure out what's happening. It's suddenly turned. The whole story changed dramatically, I would say, 2 years back when the first month of the pandemic played out. And I would say, Nitin, over a period of time, our thinking on this has kept evolving. In the initial period, we thought this is more an episodic surge driven by, the fact that people are locked up at home. There is easy digital access, which all of you have provided to investors in the market. Interest rates were low. It was more conducive to put money to work in markets. Probably even mutual funds performance in the recent past was pretty tepid. So there were a bunch of factors where the investors just felt that time to go to markets. Plus, the crash that happened when the pandemic set out gave, in many ways, the darling stocks into mouth-watering zones of valuation. So there was a bunch of enabling stories. So we just thought probably it is episodic that's driving investors into the market. But as time has passed, the numbers just seem to be just going, one way. I remember 50 lakh Demat accounts getting opened in the year before, tripled to 1.5 crores in the pandemic year. Last quarter was another crore. So the numbers just seem to be going. I think more recently we are veering towards a view. It's not just episodic stuff. Probably that triggered it. A little bit of structural plays coming into action now. And what I mean by that is that Gen Z, younger millennials, not even the above 30, I would call them as a slightly different set. Maybe below 30 and the Gen Z is probably what is triggering this kind of a uptick into the market. Most of them are, I would say, digital natives in their persona. So they relate very well to the kind of offerings all digital players offer. So it's a pickup, and by psyche, they are very comfortable investing in financial assets, right? Lots of them going into cryptos, not going to go and buy land. They're not going to buy and gold as much, maybe a little, if at all, digital. Right. But yeah, I think the net persona, very conducive to this style of investing, financialize, more affinity to financial, more affinity to digital natives. I think that's what is probably driving. And the numbers I was taking stock are pretty large. Apparently 1.5 crore Indians turned 25 last year, 1.5 crore turned 25 this year, another 1.5 crore turning 25 next year, and the story is going to continue for a few years. So I feel it's a little bit of a structural uptick.
Are you also seeing a large growth in the younger audience, or because we've been a big beneficiary, right, as in Upstox, Groww, and us, in terms of the younger audience. But are you also seeing that surge at ICICI as well?
Yeah, we are seeing 88% of what we acquired in the last quarter was actually coming from tier 2, tier 3. I think the number was close to 68 below 30, 68% below 30. That number was 44% 1 year back. So it is changing.
Got it. And one of the questions, which I was very curious about now that I have you on the panel, which is, what's happening with the AUM also is going up, or is it just the user growth?
So 2 years back, Nithin, our AUM used to be around 2,40,000 crores. We crossed 5.5 lakh crore this December. We announced that number. By the way,
right? No, I know. Right. No, but
it's about
what I wanted to know is how much of it is market growth.
No, I don't have the segregation, but you can attribute, whatever markets have sort of doubled from there, right?
Right.
So,
Got it.
But not all of that is equities for us. There's mutual funds. There's all of that. So there would be growth as well. But certainly the gunpowder that's available with the younger guys is no match to the gunpowder above the more senior guys. I think that's very clear, at least to us. So how deep these guys are going to be in terms of contribution and how long they will contribute is really to be seen. Not sure yet.
Lalit, I actually, I'm really flabbergasted with your growth. I mean, like I was just looking, someone shared mutual fund SIP numbers and they said, Groww has 2.5 million SIPs. I mean, that's just ridiculous. As in, how is this happening? I mean, you guys have been under the radar and gotten to, not really under the radar, but in the sense, I'm like, how did you guys grow to 2.5 million SIPs? As in, where is this growth coming for you? Again, tier 2, tier 3, or is it more metro?
So our growth has been very well diversified across India, and tier 2, tier 3 has played a big role. See, we on this growth side, right? I think what my feeling is that the real thing actually started somewhere like 2014, 15, 16, kind of that 2-3 years, right? When a lot of things happened, and you would know better than me, Aadhaar, UPI, Digital India, demonetization, a lot of things happened in sequence, almost as if the world is conspiring. Okay, now these guys should grow. So, and then our focus has been on SIP because, we feel that SIP is a real democratic, really a mass product. I think 100 million, not 100 million, let's say half of India or everybody should be doing an SIP so that because I earlier, our parents used to do FDs and savings account and so on, I think, but money is actually made by either foreigners or HNIs and so on. And now I think platform like ours, all four actually, by the way, I've been when I was in college, when we were at IITB, I opened ICICI Direct account when I was in second year.
I started my online trading on ICICI Direct too.
Yes, so. We heard that story and I really loved it.
Yeah. But Lalit, the question I had was, see, us and Upstox, we've been around almost for 10 years now. You guys are just 4-5 years old. Maybe the first 1-2 years you're building your product, so you're very young as a business, and it's phenomenal that you actually grown to so many users so fast, so what is it? What's helping you? As in, is it because I see a lot of this YouTube content that you put up, a lot of focus on SEO and all of that. What has been the biggest driver of growth for you guys?
So there are 3 things, Nithin, I think, right? Number one is, as I said, overall tailwinds in India. I don't think we would have done even 1/10 of what we are today had we not had seamless onboarding through Aadhaar, UPI, and e-sign, a lot of those things, right? So that is number one. Number two, overall, we are in a situation where we are in a win-win situation. This is an industry in last 5 years, if you see, competition has actually helped everybody, right? So more people coming in and the ecosystem is growing, right? So you, for example, you and Upstox and even ICICI Direct, even before that, you kind of also laid the road, right? Now people, 4-5 folks coming up, educating customer, not just our YouTube channel, Valcity, Upstox has a lot of interesting content. ICICI Direct anyways have been doing a lot of content. So that is, I feel, I feel the second kind of reason. And third is the rise of young India. Like, I think it's also kind of a risk because it's exciting. Like, mutual funds, stocks are more exciting than, let's say, opening a boring kind of, doing what our parents used to do. So that is also, I think, one big component, and that also is kind of slightly a risk factor. But I think overall, these are the things.
Got it. I actually met Kavitha recently, at the India-Pakistan match at Dubai. Upstox ads were all over.
It's a match I want to forget quickly, but yeah.
Yeah, the match was forgettable, but has that helped with us significantly? All the money you guys spent on branding and advertisement, has it significantly contributed in the growth in the last 2 years?
Well, so Nithin, I absolutely think so. And sorry to sort of also try and answer the earlier question you posed to Lalit. Honestly, I think our industry is actually about 5 years old. And why I say that is, 10 years ago, 2015-ish, actually, I was at McKinsey and we were studying just India's equity participation. And I was sitting at this flat 2% equity participation for the previous 5 years. 2016, we studied it again, I was still at the 2%. Right. And Lalit's absolutely bang on. 2016, I remember this, Nithin. I'm sure you remember this. I'm sure, Vijay, sir, you remember this. But pre-Aadhaar.
Call me sir, yeah.
But, pre-Aadhaar, we would be thrilled if we were opening 1,000 accounts a month. Right. And I remember this October 2016, Aadhaar came and, we were so excited. We just went off the stables with the complete paperless account opening. And then, the next month it's 2,000, the next month it's 5,000. It kept accelerating. And so what that enabled is what was earlier a Bharat story. What was earlier an India story and mainly a metro story. So we were getting bulk of our customers from the metros because seriously, who wants to download, print and sign a 30-page form? And then overnight, literally 80% of our customers started coming from tier 2, tier 3 India. So really, I would credit, the Aadhaar, the geo stack with massively changing the face of our industry about 5 years ago, right? And of course, all the demographics that, Vijay, Lalit, you guys have been talking about. But there are two other things, right? One is I think our regulatory environment is actually fantastic, right? SEBI and others have done a fabulous job safeguarding the customer interest. Things like a demat account doesn't even exist in the US, where brokers actually hold the shares. And we all know, the whole Robinhood PFOF story. None of that is even possible in India, right? And time and again, margin rules, a lot of these regulations come in to safeguard the customer interest. And of course, when the customer interest is safeguarded, the industry is going to do better. So I think there's a huge play there. But also interestingly, recently I was looking at the numbers. If you see the Nifty growth, right, it's very interesting that the P multiple has stayed over the last 5-7 years, has stayed very tightly in the 20 to 25x range. Even now it is in that same range. So which means that the entire growth story is actually an earnings growth story. It's an economy growth story. It's a GDP growth story. And that's a very strong foundation for the stock market to grow on versus, had this been a P multiple bubble, we should be worried. But this is a foundational in India growth story that people want to participate in, that, access has been enabled thanks to all the technology stack like Aadhaar and others. And of course, players like us are also doing our bit, educating people, right? We're going mass media to sort of increase awareness and therefore, the IPL and all of that. And of course, Nithin, you guys are doing your own bit everywhere from the product angle, nudges as well. So I think all of us doing our own bit, and ICICI, of course, has been there for years now, carrying that torch, carrying that before we even showed up on the scene. So I think all of this is really a foundational, fundamental growth story that we should all be very happy about. And again, today, if we can say that, the last 5 years, India's equity participation has doubled, it's still gone from a 2 to a 4%, right? And even, countries like Thailand, Malaysia are in the 20 to 30% equity participation. So I feel like the potential here for the market to grow is so huge that we all have a lot of work ahead of us, frankly. This momentum, I think COVID definitely played a brief role. Mm-hmm. But I think this is a momentum story. With or without COVID, this market is on its way. Indians are participating in India's story, and this is phenomenal to watch, phenomenal to participate in.
But what are the risks? See, the thing is, I'm a very pessimistic guy, so
yes.
So, I keep talking to our team, and I keep talking about this, shit hitting the fan incident, and now, like the folks on the team, are frustrated. They're like, dude, when will this event happen? So, I've been talking about this for the last 2 years, 3 years now. So I see, I mean, I'm generally pessimistic. So I see a lot of risks around me, right? As in, right from, when you spoke about the market size, like in my head, the target market in India is not really more than 7-8 crores because, for people to be able to invest, they need to have money. And India, more than 7 or 8 crore Indians don't really have the money to invest. Of course, like Lalit said, if we can get 20 crore Indians to do a 100 rupee SIP, then the market is automatically large. Right? So, what are some of the risks you see as in, when you look at this, and not being as pessimistic as me, but, being more optimistic, where do you see some of the large risks that you see? Apart from, of course, markets not doing well, because if markets don't do well, obviously the participation drops. Apart from that, what else do you see? So,
yeah. So two things, right? One is who would have predicted the rise of e-commerce, and Lalit here is from Flipkart. But the prediction now is for about 600 million Indians to not only be financially savvy enough to be an e-commerce participant, but to also be comfortable doing financial transactions online, right? And now imagine our industry does not even have that logistics leg that e-commerce does. So honestly, the sky is the limit for us, right? And I think the onus is on people like us to sort of educate people more on the importance of investing. See, in terms of the risk, I think it is the rise of a few bad actors, really in our space, which would be the biggest risk for us. Be it, the tipsters that show up on these WhatsApp and Telegram channels, right? Or even, certain players like, kind of incidents that happen with a Carvi or an IFL, a large player like that going down. That could be a risk.
ILFS, you mean, right?
Yes, sorry. Oh, sorry. I'm so sorry. My bad. Yeah. One other interesting risk could be that, with the financial services and fintech space expanding, people are getting into multiple sub-segments. So for example, something happening in the credit space, like a rise of an NPS there, or something happening in the crypto space can have an impact on the entire fintech space. So that's another risk as well. But I just think that, if players like us can come together and, at Upstox, and I'm sure it is the way it is that's the way it is for everybody here. We all understand that so long as the customer interests are safeguarded, our long-term interests are safeguarded. That's very clear. And so long as players like us come together, and maybe we should all come together and do a little bit more in terms of making sure that, sort of the bad actors are, especially like the tipsters, et cetera, taken care of. The quality of education and content that's put out, has some measure of, quality metrics and so on. So that I would think is the biggest risk, but I think it's also something that we can come together and sort of help address.
Right.
So Nithin, I'm going to jump in. I quite resonated with what you just mentioned, that, that only a bunch of Indians really, while the numbers are still very massively underpenetrated from a headline perspective, but real economic power is probably limited to the numbers that you described. Yeah, but I would say, if you were to think a few years forward, I think that number should increase simply by virtue of economic per capita improvement, which is invariably bound to happen, I think, given all the stuff that's happening around us in the country. So today, yes, but tomorrow may be a little different story in terms of availability of such people with economic momentum. But to Kavitha's point, I'll just add, I quite agree with all the stuff that she said. I also see cyber risk as a big threat to our industry because that can really dislodge some cyber incident or some cyber sort of a fraud stuff that happens. That can really dislodge the whole growth momentum quite badly and break this whole sentiment. God forbid something big happens to any one of the larger players. I think it'll take a while for healing.
Got it. And Lalit, anything you want to add to this?
Nothing particular. I feel like one thing that I don't like is that, like, something in lines of what Kavitha also said about this, a lot of excitement about like trading and things, right? So I think, Nithin, when you say like 7-8 crore or 5, so that kind of, if you look at from that perspective, I agree. Like, not many people should actually do trading and stuff like that. Should be limited. But when we just think about the horizon as like, okay, investing, SIPs and so on, then they can be even 20 crore, 30 crore, even 50 crore. Like, that can be even full India like doing that. And I think My only worry is that with all these excitement and stuff, like investing should actually be very boring, right? Like just do keep doing like, auto deduct SIPs and just don't do every day checking your portfolio and all. But if you look at like a lot of social media, specifically Telegram and all, like a lot of behavior is kind of encouraged where you kind of are doing learning advanced kind of stuff and doing. And you also know, like you have told yourself, right? A lot of retailers actually lose money there. So we don't want to let, let's say, half of the India participating and like losing money. Like we need, and by the way, all people here are doing very good job in educating and everything. I think we need to ensure that as India comes on this bandwagon, like they should make money. They should not lose money.
Got it. Yeah. I mean, while I'm pessimistic, a lot of my VC friends, right? I mean, they keep telling me that real magic in India will happen when we hit $4,000 of per capita, so.
Yeah, that's what I heard recently as well. Yeah. The magic number. Absolutely.
Right. So hopefully, we get there soon. So I have, in terms of, like what just Lalit mentioned around, like, see, this is like a, like a personal issue as well, like philosophically, right? Which is while I also want all our customers to just invest into nothing, it's very tough to make money by, when you're zero brokerage on equity investing and people just hold stocks and do nothing, right? So we have like a conflicted kind of a view here, right? So like sometimes I wonder if the pricing, if there was no zero brokerage, if the brokerage was high, would trading have been lesser, and would it have been beneficial for for the industry overall in the long run, right? Because you then not everyone's going to trade thinking they can make very quickly money. And what's your view on this? I mean, one is around, should people trade? Like, how do you should people really actively trade frequently, right? I personally think not everyone should trade, but it's kind of it's probably a little bit of hypocrisy saying from a large retail broking platform where a lot of people trade. So I can't really maybe say it. Two is what do you guys think about like the industry and the pricing power? Like I know Vijay would love if we all upped our pricing. I mean, how do you so how do you Lalit and Kavitha, how do you look at this over the long run? Do you think there'll be continued, I mean, the entire industry will continue to work at zero brokerage, or there'll be the prices will go up eventually at some point of time? Kavitha, now you probably track the US markets, and we as Indian brokers have no ways. I mean, probably we have 1/10 the ways in which the US brokers can make money, right? As in from the customers. Like you said, all the stocks sit in the street name. So, they can lend stocks, they can margin fund stocks, they can earn on the float forever, right? As in, and right. So there isn't too many ways in which an Indian broker, actually any, capital market intermediary can make money. So what do you think about all of this, as in terms of maybe Kavitha, you can start. Sure.
Yeah, so many questions here, Nithin, but I'll start somewhere. The first question was, should we be dropping prices, putting out great products, and should we be encouraging people to trade, really, right? And I think for me, there's one anecdote I'm going to share. So I spent 2 years in microfinance, working in tier 2, tier 3 in India. Right. And the first time I went to a village, I had grown up in Bombay, and I'm from Bombay. So the first time I had to go to a village, I went with the full hubris as someone from a city going to a village, thinking in my mind that, I'm going to go to the village and explain finance to people. And when I got there, I completely figured out that, everybody there knew everything there was to know. They were very, very entrepreneurial, very smart, very savvy. They knew everything. They just had a very different ecosystem and different kinds of access and opportunities than we had in the cities, right? And so for me, that's really, really telling. People are very, very smart, Nithin. It's the equivalent of somebody from the US coming and telling us how to manage our money. You're not going to like it, right? So my learning is that India is very smart, very savvy. Tier 2, tier 3, Bharat is absolutely smart and savvy, right? What they lack is access. So I firmly believe that we're doing a brilliant job by enabling that access. Why should an Indian anywhere in India not have the same kind of access that would have in a city? Right. So I think this is something that we are almost obligated to do. This should be done. And if not us, somebody should be doing it. Right. Of course, along with it, we're, for example, in the business of fintech. It's not, for example, e-commerce or shopping. And so I feel like there is a higher degree of responsibility and onus on us to make sure that the adequate levels of financial literacy, the adequate levels of ensuring that people are doing the right things, stop losses, hedges, whatever. So that's a job that we got to take seriously as well, right? And so, I think so. That's the perspective on should we be encouraging trading at all. In terms of pricing, I just feel like India as a country understands value, right? And so I would give an example of, say, Indigo Airlines or the discount airlines industry, right? Of course, when they started out, the pricing was lower and all of that. But when Indigo became an airline that had the best on-time arrival, you could see that people were willing to pay full fare fees as well. So I'm just saying that we are actually rock bottom in terms of prices, right? And that allows us to scale, right? So if the goal for us is to scale, then I think the sort of pricing that we are at is actually a great thing for the customer, right? There is still definitely a lot of value on the table. And I do see that our customers are able to and willing to pay more. But if our goal is to take India's 4% equity participation, translate that into 20, 30% and say every Indian, no matter who you are, where you're sitting, irrespective of net worth, if you're earning 10,000 rupees a month, 15,000, 20,000, how do you participate safely in the markets? And if that's the goal, then I feel like, we're in the right space doing the right job.
Got it. Lalit, how do you think about all of this?
So I mean, if you go to first principles, right, Nithin, like if you're adding value, and which you all are, like I think there will be certain price for that value, right? And customer would be willing to pay for that. So number one. Number two, I think we are now getting into the internet zone. Internet, like earlier there were brokers who would, or there were financial services company who would kind of serve certain category of customers. But now, like with leveraging geo and very, very cheap internet, people are getting on and so on. And we can reimagine how the new world will look like and so on. And to some extent, you have yourself done a lot of it, right? So I think to be very honest, we don't think too much about pricing a lot. Like, it's like direct mutual fund is already zero. I'm thankful to regulator that you cannot go negative, because otherwise somebody will have started, that discount and so on. So they're already zero. I was like, and broking, of course, is very low cost. And likewise in other financial services also, like I think value will emerge, like where the right pricing will emerge with the value that we provide and so on. If you're getting commoditized, then like it's a capitalistic world, right? You can't do anything about it. But I think there is a lot of value that will get generated over or next few years.
So Nithin, while you didn't address this question to me, I still feel I want to say something.
Right.
I personally feel that we play a very, very responsible role, because your customers' money is finally entrusted to get routed to the markets through you. And therefore, I think in financial markets, and probably I can say that because I've seen different financial markets over the years, you cannot just assume that, the customer knows everything. It somehow doesn't work like that. You have to put guardrails, you have to put safeguards, you have to give various inputs, including education. And he has to, what should I say, feel some skin in the game to be, when he's taking a risk. He needs to understand he's taking a risk. And I think, in a way, pricing is also skin in the game of sorts. And I personally feel that, we have to price products today. Unfortunately, we need to price products today which enable us to have resourcing capabilities so that you're able to give him that kind of an input, and not completely leave it to him to do what he has to do and figure it out. And that's my personal sort of a conviction, belief, particularly after having seen various financial products. And over a period of time, last 4 years, we've probably just seen a one-way ticket. So there's very little negative stuff that any one of us have seen last 4 or 5 years, but I've seen it over 20, 25, 30 years. And I know it can be very, very painful when you have those difficult periods. So I think, and then people just forget that 8 or 9 years of golden run. It's all forgotten in a jiffy. So we have to play, I think, a very responsible role, and therefore pricing should be done in a manner that it is fair to the customer. I think Lalit pointed out value. I completely agree with that concept. I think you have to provide value to the customer, and you should be willing to pay for it. Pricing exorbitant is absolutely off the table. I don't think that's the right thing to do. But a fair pricing is what I feel one has to veer towards. If you ask me today, is the industry pricing fair? I don't think so. I think there is some journey to be covered where the
upwards or downwards.
No, I would say that clearly there is scope for downward movement of prices from here for some players, and upward movement of prices
for some others. That's nice answer. No, but like broking as an industry itself is becoming more capital intensive, right? As in, while the regulations are helping, kind of safeguard the customer, it's actually making it harder, in terms of for a broker, right? So how do you, Vijay, now that, we are in this topic and with your experience, right? As in, how do you see this industry? I mean, there are 300, 400 retail brokers, but then, with so much, say from April 1st, right? As in the funding requirement for a broker, is just going to go up, significantly, So how do you see a longer term trajectory of the industry? As in, do you continue to see that there'll be 300, 400 brokers, or it'll get more concentrated as well?
So Nithin, I sort of, in a way, joined this industry. You guys are senior to me. You have more experience in this industry than I do. I've just got about 2.5 or thereabouts of experience. So I'm learning. And let me tell you, when I joined, there were more than 500, 700 brokers, 2 years, just about 2.5 years back. It's probably less than that number now by a mile. So folding up is already beginning to happen. Consolidation is beginning to happen. A lot of players today who are large players are probably backed by support in form of equity, which is supporting growth right now and not necessarily supporting profit generation. So till when that is going to last, I don't know. But certainly with the developments that's happening in the capital markets, I think at some stage, investors are going to, eventually we need to understand market wants money to be made out of their investment. They need an ROE. That's the basic principle of law of investment. So I would say, I think there is going to be more action. Consolidation as a larger theme playing out may not happen with the larger players in the immediate future, but I would not be surprised if there is some consolidation even amongst larger players a few years into the future.
Got it. Kavitha and Lalit, you guys have raised quite a bit of money. I mean, have you looked at this as an idea of going and acquiring smaller mid-sized brokers, or it doesn't make sense because there are no synergies because of pricing?
Kavitha, you want to answer?
No, sure. I'm very happy to answer. So, by the way, I do think that there'll be a little bit of an expansion because more and more people are seeing the opportunity in this space. So there may be some more players entering, but of course there is definitely consolidation, Vijay, to your point. I think for us, we would look at acquiring when either it brings additional speed to the market or it gives us a skill set we don't have. To that extent, acquiring a smaller broker may not necessarily sort of play into that theme. But yeah, we're open to acquisitions where generally it adds to our skill set, or it's a great set of talent, or it's an adjacency that we're very excited about entering. I think those would be acquisitions we're absolutely happy to enter into.
Yeah. Lalit, you guys actually acquired, right? The AMC. Sorry, I should have.
Yeah. So again, I think it's the same thing. Like,
yeah.
See, we don't have all the skills that are, that will be required to build a large financial services company, and we don't we are not like a completely broker. Like others, we focus very less on trading and more on investing side. Like build. The real kind of aspiration is to become like, okay, if I have like most of India like doing investing, SIPs, and and so on, that would be like a success for us. And I think to do that, it's a very big, hairy kind of ambitious goal, and we would need skill sets like India also, this was an example, right? Although it is still in regulatory kind of approval phase. A mutual fund is a very democratic product. Like, mutual fund can be 100 million users should have been investing in India today in mutual funds, right? And they can be 200 million, they can be 300 million, and so on. So wherever we see that, something that can kind of complement there as well as help us go faster in the market and so on, we would be open to do that. But in general, we are a bit conservative. Like, we raise money, but we don't spend money.
Right. So, Lalit, now, since you spoke about your customers and SIPs, etc. So do you, how are you looking at your customers, in a longer journey of sorts? As in, do you look at, kind of tomorrow, you're doing AMC, you'll do insurance, whatever, right? As in, are you, kind of trying to become an ICICI bank, like a large conglomerate, or how are you looking at this? As in the longer, what does Groww want to be in the next 3 to 5 years? As in, do you want to be doing all financial services, or just
You're asking me to reveal my everything in front of my competitors?
Okay. I mean, whatever you can. As in, what is?
Just kidding. Sorry. No, idea is to kind of, so we come from this world where access is like the magic word. Like Flipkart did e-commerce, like accessible to million. Like, I come from a very small city, very like village, you can say, right? And, you can't imagine buying things there or even investing there, or like investing in mutual funds there, right? And so on. So I think the real aspiration is that if we make financial services accessible to kind of every corner of the country in the right way, not like not in the wrong way. So it will take time. It's like a 10, 15, it might take us like next 20 years. We are ready to do that, right? But idea is like, if we can enable that access with transparency, with simplicity, like, how we have done in mutual funds, if we can repeat this story and like, stocks and then all other financial products, maybe we might do insurance in future, but not currently, but maybe in future. But ultimately that's the goal.
And Vijay, because ICICI has this legacy of advisory business, etc. So I mean, this is a question we internally keep asking, right? As in, should we assume the role of a platform and not advise our customers, or should we in some way actually look at advising customers, what to do? As in, since you've been there, as ICICI director, what's your view on it? I mean, can that be done at scale, you think? I think, is it possible to have 1 million customers whom you are advising using whatever means? As in, you must have thought about this problem quite a bit, isn't it?
So, this is a very, I would say, very relevant question that you have posed. And if you really ask me, it's the need of what is probably required in the country, given the profile of people coming into the markets. Is it possible to do? I think it is possible to do, because so much of data is now available with all the digital players. It is possible to in a short period of time, use this information and data, of course, with the customer's permission, and do his profiling, which is, I would say, very, very important when you offer a service like an advice. You need to understand what your customer's profile is, what his risk appetite is, and so on and so forth. The second angle is that you need to offer him a gamut of propositions, because one needs to understand that when you're advising a customer for investments, it is not about one category of assets or one category of investments. It's got to some amount, there has to be an asset allocation approach. Some goes into fixed income, some goes into equities, and some goes into a hybrid product, and so on and so forth. Again, based on his objective and risk appetite. So you should have the capability to offer a width of products. Which, does it exist today? Certainly it exists today. So you can get deep understanding. You can get wide proposition of products, so that you're giving him a balanced thing. Can you do it at scale? And I think that's an important question. I think today technology and analytics play has evolved to a point when it is possible to do it. And yet we don't see that happening. The question really is why? I think the answer, in a way, in one of the earlier questions, I think Kavitha alluded to, that it's a value market. Customers, for whatever reason, in India don't want to pay for advice. And the way the whole regulations are sort of played out today, the onus of advisory revenue model is completely on what you're able to get from the customer, and customer will not probably pay for advice. They want the advice free. So there is no economic sort of model today, and probably that's the reason why advice at scale has not taken off. I don't think it has anything to do with technology or in not having capability. I think it's certainly possible to have all this. I'm pretty optimistic it will eventually happen when there is ups and downs in the market at some stage. But is it going to happen in the immediate future? I don't think so.
Nithin, I know that you're clearly the moderator here, but it's such a travesty to have you on a panel and not ask you a few questions. But what are your thoughts on this?
No, I mean, yeah. So the thing is, we've experimented within Zerodha, right? As in, we have realized that people are not good at following advice if it's not a human on the other side. So it seems like like as soon as the money involved is a little larger, it's 50,000, 1 lakh rupees. People want to talk to someone before taking a decision. Just a robo advisory kind of a platform is maybe not enough. Right?
Yeah.
And maybe you can also see like Wealthfront just got bought out by UBS, right? As in, I think the original robo advisory platform, right? So I don't think robo advisory is even working in the US as well, right? As in, if even Betterment's or like $5 to $7 billion of AUM, etc. So they haven't really gone anywhere. So yeah, so personally, I kind of agree on what Vijay just said. I think we need to have humans advising, leveraging technology. But who's going to solve for it? I hope it's one of us. So because we have the customers. I think what advisors today need is, I don't think if you're going to build a Zomato of advisors, right? I think what the advisors will need is customers, because I don't think they'll be able to spend money on acquiring customers, because I don't think, like Vijay said, there's not going to be pricing power, right? You'll not be, like a normal person will not be able to spend a few thousand rupees to acquire customers. So I'm hoping, one of us, when we are pushed because of competition, will wake up one day and say, what, we need to build an advisory ecosystem. So it's on our list of things to do, but we don't know how to go about solving for it. So that's how we are thinking about this. Yeah. So the other one, right? Like I think we'll all agree that IPOs were a big reason for our growth as well, right? As in at Zerodha, every time there was an IPO, our account opening just bumped up. It must be the same with everyone, right? So given what's happened with some of the recently listed companies and the drawdowns they're seeing, do you think this year is going to be like a lot more tepid? In terms of growth because of IPOs, maybe Kavitha, you can give it a shot first.
Sure. Look, there's already a ton of IPOs scheduled for this year, right? And so the question is more, what's fundamentally driving the rise of the IPOs? And it's seemingly the robust startup ecosystem in India, right? Now, suddenly that ecosystem has come together, right? There's the rise of the VCs, there's rise of the entrepreneurs of India. It's no longer uncool to be an entrepreneur. Tumhari shaadi bhi ho sakti hai, right? And then there is a vast talent pool in India. And on top of it, the government has spoken about startups so much now in the recent past, the budget itself, that this now seems to be a very strong groundswell movement. That's not, historically, India has been the land of the entrepreneur, yeah? And now that the ecosystem is getting stronger and stronger, I don't see that this IPO momentum is going back anytime soon. I think it's fundamental growth.
So I don't talk about future, like near future. Like, see, if you ask me 10 years, Nithin, like, see, look at the things that we are using today. If you look around, like I was I was not well for last 2 weeks, and I was just thinking, what are the kind of things I'm using? All are like, half of them are provided by startups, and also I support some startups. So like everything I'm using is, and likewise for you, and like all of us, right? So eventually that would be visible in the index as well, on the exchanges as well. Now, what is going to happen this year? Very tough to tell. Like market situation in short term can't be like very tough to kind of tell anything about it. Like, but I think we'll have to educate customers to evaluate how to evaluate internet, especially the internet companies that will go live. They are very different economies, like and understanding J-curve, understanding the unit economics, and so on. I think that's where I think people are learning. Right. But I think I am very positive about overall startup scene of the country.
Got it. Got it. And Vijay, has IPOs also given you a lot of momentum last year? As in,
indeed, Nithin, last year was, I'm talking about the fiscal 2021, was a record year of sorts in the IPO market. We've been pretty actively involved ourselves, taking number of startups to the market. This year, for the 9 months, data has now come out. The numbers are ahead of previous years. So to your point, whether it's going to be a good year, it's already a good year in 9 months itself. And so I think pipeline interest, supply is very much vibrant. However, I must say that there has been clear breakage of momentum, and probably one has to look at the last 3-4 months when we've clearly seen some breakdown of momentum. This momentum, in a way, coincided with some of the companies which went out into the markets, didn't get a good enough post-IPO listing price. A lot of people were disappointed with what happened thereafter. It kind of dented momentum for sure, dented sentiment for sure. And even while we were healing out of that situation, we really had Fed in the US announce tapering and interest rate hikes at probably at a much faster pace than most people imagined. And suddenly the narrative on inflation, which controls in some sense interest rate movements, also started becoming sticky from being transient. So the narrative suddenly started changing on the Fed side, liquidity side, which means that both from a sentiment in the domestic market side following the tepid performance post-listing, and also the liquidity withdrawal in the global markets due to tapering at a faster clip, has, I would say, added to dampening of the sentiment there. Does that mean that the IPO market will disappear going forward? At least let me talk about our own pipeline in the not near and maybe slightly more than near-term future, slightly longer near future. I would say that the pipeline is from a supply side is very healthy even now. Lots of people want to hit the markets. But what is happening is that the pricing expectation is clearly getting questioned very, very sharply. So it's no longer wild pricing anymore, no longer. So I think most of these companies have got good governance, good business fundamentals. Anticipation of growth is quite strong, but then they want to factor everything, assume everything has happened already in the value expectation, and that's what is getting resisted. So I think there will be some dampening in the near term till there is a reconciliation in the minds of the issuers that, okay, I'm not going to get this kind of pricing. So there will be some slowdown.
Which is not like, if IPOs are priced better, which is not like a bad deal for the retail investors, right? So they at least get in.
Absolutely. Right? Absolutely. I think it's good. What's happening is really good, healthy from a investor perspective.
Got it. One kind of, a couple of last questions, the one was around any regulatory changes that you guys wish for, as in, I have a bunch now, if you all don't.
I think you should answer this question for all of us.
Maybe you can go one after, maybe Lalit, you can, any wish, any changes in regulation that can help the ecosystem, as in to grow more, faster, bigger?
Yeah, so one thing I think investor protection, SEBI has done a phenomenal job on investor protection. And like one good thing about all these regulations is that they are aligned with all of our principles, like, customer focus. So we are also customer focused and regulations are also investor focused. And like they are kind of act like a tailwinds for us forever. One thing, my wish list is like all these unregulated stuff, right? We should kind of draw some visibility, black and white kind of, because it's kind of, there will be a lot of bad actors and, it can spoil things and so on. So all the unregulated spaces, I think either we should kind of put black and white, like, put clearly lay down the rules and, this is how things should go. And that will, I think, because now there are millions of people kind of, in country, internet has like everything you do, like, it's like millions of customers and billions of dollars and so on. So I think that's the only thing that rest, I think we are very happy with what all the things that regulators have been doing, and really thankful, like as I said, like we wouldn't have kind of been so large if there were no all these innovations that happened in the country.
Got it. Kavitha, anything, any wish list from you? In terms
Well,
of
I largely agree with what Lalit said, which is that we're genuinely blessed with a great regulator. Globally, a lot of the practices that we have in India are actually best in class. One of my wish lists, and I know you're going to talk about the STT, but my wish list, one of my wish list is that I wish the markets were open longer. It's very difficult for the average person who's juggling a job to also be available during market hours. So that kind of really restricts market participation. I don't mean necessarily 24/7, but if we can
We should
actually
do SIPs. Sorry.
but I think extending the market hours would definitely help improve participation.
Got it. And Vijay, anything from you?
I've had the privilege of dealing with large number of regulators across jurisdictions because I was running the international business at ICICI Bank, and there were, OSFI, Bank of England, the US Fed, HKMA, Singapore, all of them. I've seen them. I've seen the RBI and I've seen SEBI. And I must say, SEBI has been one of the most vibrant regulators that I have got a chance to engage and interact with. And I must also say that we are very, very blessed as an industry body to have a regulator which is so proactively thinking of the whole industry in a very, very balanced way. And I think over the last, 30 years that SEBI has been around, they have done a phenomenal job in the growth of capital markets. So I really am thankful for what SEBI has done. And they continue to do. I think the pace at which they keep coming out, I think we find it very, very encouraging to see a regulator acting with that kind of a velocity and pace, including when we had the pandemic. So 2-3 things come to my mind as to what could be the next areas of focus. One, I would say is there is a need to strengthen, I would say, intermediation parameters. So when an intermediary like a broker is coming into the market, he's taking risk on behalf of the clients. While a lot has already been done, I think nothing like having a capital an allocation model to manage that risk better, so that serious players are there in the market. So I think there is clearly a need, just like banks have got a capital adequacy, I think brokers need a capital adequacy equivalent. Right now, I think we are too capital light in the industry. And I think that will do good for the industry in the medium term. The other thing I find is that there are certain areas in which there are overlapping regulations, a little bit of RBI, a little bit of SEBI. I think that can be cleaned up so that you have some harmony across products which straddle the two segments. It's probably going to happen with the kind of thinking that's going on. Third area, I feel NRI is a very vibrant segment, and that's in some sense a segment which we have not looked at it in a very holistic manner. We've looked at it more from a deposit / I would say remittance point of view. So whenever we had a crisis of sorts, RBI has used the NRI community very, very effectively and brought in a dollar stabilized rupee. You remember when 2014, I think it was, when that huge announcement happened, NRI stepped in, $35 billion was brought into the country, that stabilized rupee. I think NRI as a segment has got huge capital gunpowder behind them, and they have a huge intent now. I think it's very clear in their head that they want to invest in India. A good amount of money should come into India. But if you go behind the skin of the regulations governing them, while so much of great work has happened in the RI side, the resident Indian side, the same amount of digitization does not exist on the NRI side. We really, really struggle. I think the kind of experience we give to the NRI, I sometimes like to hold my hands and tell the NRI, thank you for being my customer, because it is really tough for him. So I think there is clearly scope for improving regulations around. It's not about improving; it's about modernizing regulations to become relevant to the developments that have happened in the digital space, particularly in the last 4-5 years. Lots has happened in our RI side. I think we need to do a catch up on the NRI side, and I think they can see another explosion there.
I think just like you said, just allowing NRIs to onboard online digitally is
my God, yes. I've seen a post by Nithin almost 5 years ago, maybe on this subject.
I mean, so I actually sit on this committee on the IFSC, and one of the big conversations there is, can you get NRI is to at least open accounts digitally at IFSC. So, so at least they can invest in India through that way, So, but see, STT is not really a regulatory, wish of mine. As an STT is just, I think as India, as a country, we pay quite a high transaction tax. I think it has to go low. But I think just to add on to what all of you said, I think my personal wish list right now is some of these regulatory gray areas, be it crypto, be it, Forex trading. I think RBI put out a circular recently, on this, be it CFD trading, etc. And I hope, there are clear regulations that say, what, you can do this, you can't do it. And there is no interpretation and all of those out there. By the way, Vijay, SEBI has put a white paper on this capital adequacy ratio for brokers. So I think what you just asked for is coming in the next 6 months.
Yeah. So now I'm part of the SMAC.
You're okay, right? Perfect. Yeah, I think we've actually run out of time. We are 1 hour in. Thanks a lot for getting on the panel, and hopefully, for everyone listening in, it was interesting. Thanks.
Thank you. You made this discussion very enjoyable. Thanks a lot for this.
Cheers.
Yeah, Nithin, thanks for moderating this, and thank you, everybody. It was such a pleasure being on this panel with all of you.
Thank you so much, everyone.
Yeah. Cheers.
Thank you and good day.
Thanks.